All aboard Amazon. AMZN, Amazon.com. And I think that is on the NASDAQ. Consumer cyclicals, department stores. That's the industry. And I did a podcast not too long ago on Amazon. I think it was the week ending the 4th of November, November 4th. And I had Amazon just entering stage 3. And I decided just to get another look how this progressed in the past November 4th, past 3 weeks. And it was a little bit, we had green action was right above the 12-month average. Now that the price actually, after going good volatility up and then sellers coming in and then going down, then buyers coming in, it was green above the 12-month moving average. You could check out that podcast just a little while back. And now the price action is actually below the 12-month moving average. And I see Amazon as really like the kingpin of this bull market. If ever this ends, it's going to drag. It's going to create a lot of drag. And then after that, we might really see the SPX and get below that 2630 level on the monthly candle chart. And the NASDAQ going to get some hurt if Amazon starts rolling over. So it's still 12-month average, still going upwards. Remember that big red candle is a big warning sign. So no matter what happens after, that was still a warning sign that you had. If it goes back up, it goes up, back up, fine. But usually, and if it doesn't, you've been warned not to be in a stock if it's below the 12-month moving average, especially if it closes below. So if we have that close below 12-month moving average, you should not be in Amazon. You're going to need, it's going to need a lot of time to churn to get all those buyers, now sellers that want to break even. We're going to start feeling the panic or lose confidence in its ability to go back up, especially if it takes months over months of sideways move before going upwards. They're going to be selling. Got to watch out for that. Let's zoom in on the weekly. Ooh. Okay, so where was remove? Okay, that's my monthly define. I want to keep that. My monthly define. Monthly define. Resistance, breakout. Monthly defined support. That's it's like invisible on the weekly because you have that noise below, these weekly closes below, but the month is a higher time frame and it sucks the price back up, and the close of the monthly is actually important defined support. You could have the price action sucking down through it, but the price action is most likely going to close above. If it closes below on the 12-month close on the monthly chart, then that support is now turned resistance and you're going down, unless you have a whipsaw, a false signal. But on monthly charts, a higher time frame, the less you get whipsawed, the less intra-weekly, intra-daily. You know how you could be going up during the day on the minute chart, but after that, when you zoom out, then you just say, hey, I'm in a downtrend, guys. That was just a normal fluctuations, normal movement of human behaviors, buying at different times. All right. So I had this candle right here. So that was the close, November 5th. Yeah. So I had just had this candle here. So that's how it looked like 3 weeks ago. I had it entering stage 3 because I had the price action below 30 average. You don't want to be there. Still above the Ichimoku cloud, not in downtrend. And this was potentially a hammer, so you got to be careful. Then you say, this is a hammer. It's gonna go back up. This is a bottom. The buyers came back in. But remember, weight of evidence. This would be pretty good if you'd be going in an uptrend above 30-week moving average, and then you pull back down close towards the 30-week moving average, and then you get that candle above it. So here I'd have my hammer, and then you say, oh, okay. Then you say the good risk reward entry. You say I'm going in, still an uptrend. Buyers is just a natural pullback on contracting volume, and you calculate all these things, and then you know, okay, that's not a reversal, just a pullback. But once you're below the 30-week average, and that's the importance of that, the trend and the weight, and the more you're below, the more it's starting to churn. The more you're below, the more the price action is going downwards. The more fear, lack of confidence. Instead of seeing it day after day and saying, this is to the moon, it could change so fast. And just like a few candles red, and after that with heavy selling, and then the buyers become sellers. They just start panicking, and every time there's a rally, they try to sell. Price action after that went back up, but instead of pushing through and going back in, it's just the momentum has started to turn, and now this is a lower high right there. Oh, Control Z, I love it. Lower high, that's a lower high. Going down, hitting that monthly defined support. Price action goes back up. Green candle here. So you're not in a stage 4 meltdown, guys, but you're seeing the stage 3, how it's dangerous to be a holder in a stage 3. Just the fact that now it's not always upwards pressure helping you, the bull market, or just the stage 2 momentum, converting those pullbacks, making sure they're staying as pullbacks and not a reversals. In a stage 3, that's a turn of the market that has to decide the new direction, and you could get really, really hurt if you try to guess bottoms and say, oh, it's going to go back up. The weight of evidence, guys. Below 3-week average, you're trading very close, or you're below the 12-month moving average. Get out of there. Sell, don't short yet, but wait. You have to definitely wait now. The damage is done. I don't care what they sell, if they're contracts with whoever. You get out of there right now, and you just wait it out until you have a close above that monthly defined breakout line at 20, 30, and you just have to wait. What's left before a full meltdown? Well, you have that Ichimoku cloud defined support and that monthly defined close. We've seen this. I've been covering stocks that are already in stage 4. You know where this is going. The potential scenario for me is now, look at that, starting to be in a red zone here. Red, below 30-week moving average, declining 30-week average, and underperforming the SPX. And right now we're overperforming the SPX, and that's the only reason it's not red. The 30-week average is still going downwards. The price action is still below. So until this pullback finishes, and I think it's probably going to go back here, 30-week moving average. Until it hits here and goes back down, the overlay here is going to stay gray, and after that we should see it go just as the top here should go here, and this should start being red again. We're going to go retest that monthly defined support. If we go down, close below that, close below the Ichimoku cloud at 1343, then stage 4 breakdown, guys. So I don't know how many weeks we're going to need. Right now, still deepening in the stage 3, closing it on stage 4 breakdown. This could easily go back up and churn a while back, a little bit more, or even go through the 30-week average. But until we close above that 2330 level, or close below that 1441 level and out of the cloud, then there's nothing to do here. Amazon sideline. You just gotta wait. Set your alerts and wait, guys. All right, deepening stage 3. Now we're getting close. We're seeing the picture of what could happen, and let's anticipate that and just wait for it on the sideline, guys. All right, that's it. Ciao.